Do interest rates matter to the stock market? We'll be covering that today in 3 minutes on Markets and Money. If you go by our website today, realinvestmentadvice.com, we have an article posted, Do Interest Rates Matter to the Stock Market? Lots of commentary here lately that, rising interest rates and, rising inflation really doesn't matter to the market. Prices are going up anyway. That's true. And that is also not uncommon in the markets here, particularly since the turn of the century in 2000, when the Fed became much more active in the markets. And of course, we go through all that data in the article, but that's what we're also seeing currently in the markets right now. Stock prices are rising here. And in fact, as we move into Thanksgiving week, this is going to be a very light trading week. Stock prices are trading near the upper end of their Bollinger Band, simply suggesting that there's not a lot of upside to markets currently. We may see a bit more consolidation and churning within the markets this week. We're also starting to see our money flow indicators getting fairly oversold here. MACDs are still on a sell signal. Both of those suggest, again, that prices may struggle up here, but no real sign of big corrections here just yet as we kind of watch this market mature. But interest rates on the 10-year Treasury have started to decline. Now, again, there's a fairly high correlation right now between the direction of interest rates and the stock markets. In other words, when interest rates are rising, stock prices have been rising along with it. And that's because of the risk off to risk on transaction. In other words, as investors have more complacency about the stock market, they transition out of places of safety, such as bonds, into places of risk like stocks. We're seeing that occur right now. Interest rates have been moving up from the recent lows. We've seen that transition into a risk-off appetite, into risk-on. Stock prices have risen as well. But interest rates right now are starting to pull back here a bit. We're not on a sell signal just yet for interest rates, but we're getting close to it. That would suggest that we may get into a period here like we saw earlier in October with this downtrend in stock prices as interest rates are going down. These kind of correlations have existed fairly well really since 2000, but that correlation has picked up a lot over the course of the last few years in particular, as money's really been moving back and forth between risk on and risk off. Right now, bond managers are some of the most bearish on bonds that we've seen at pretty much any peak of the stock market going back historically. Doesn't mean you're going to have an immediate sell-off in risk, but as we move into the first 2 weeks of December, we're certainly into that period where we may see a bit of a risk-off transition, particularly as mutual funds begin their annual distributions. We may see a bit of a sell-off in the stock market. That may be being indicated right now by this decline in interest rates, despite the fact the Fed's talking about hiking interest rates and potentially tapering their balance sheet even faster. Interest rates have continued to move down here. So again, watch what's kind of going on in the market. These intermarket relationship between stocks and interest rates can be a bit of a leading indicator about what to expect next. Currently right now, not much to worry about as we go into a very light trading week. Earnings are still very positive here. Appetites for risk still very elevated here. But again, interest rates may be telling us a little bit of something as we head into the first 2 weeks of December. So pay attention to your money, pay attention to bonds, and we'll see you next time on 3 Minutes of Markets and Money.